How do you avoid losing all your money when learning to become a trader? Well, the secret is learning why and how money is lost in the market and then reverse engineering that into a profitable strategy. That's what this lesson's all about. Welcome to Level 1 Market Psychology, Intro to Pain and Pleasure Theory, Why Traders Lose. So what is pain and pleasure theory? Well, starting off, this is pretty much the most important concept that I will share with you throughout all these training videos. This is really what our methodology is all based upon, is this concept. So pain and pleasure theory is a concept developed by Trade ATS, developed by me years ago, that describes why most traders lose their money and the process, which is important, the process in which it actually happens. If you've ever come away from a trading session, particularly if you're a day trader, and you had a horrific trading day, let's say that you had 15 or 20 or even 30 closed positions, and most of them are negative, and you're thinking, how is this even possible? The market typically goes up and down 50% of the time. I should have at least a 50% win rate. How did I lose almost every trade? Well, there is a reason for that. And by studying that reason, that really is what led to the understanding that ATS has, among some other things. But that really sealed it in. Why do traders lose? If I could figure out exactly why traders lose, then I would have the winning system. So it's just about reversing that whole process. And I've kind of already got into this, but again, why is pain and pleasure theory important? It comes down to by understanding why and how 95% of traders lose, you also define the exact strategy needed to become profitable by doing the opposite. We're going to flip that on its head so that by understanding exactly how money is lost, we make sure that our strategy is in line with how money is won. If you want to understand market psychology on a deep, deep level, then it comes down to understanding our reactions to two primary emotions that we deal with as humans. The first one is how we experience pain and what pain makes us do. So think about this for a second. When you accidentally touch a hot pan or touch a hot stove, you might brush up against it. What's your immediate reaction? Well, most people, when they feel that searing heat or that pain start to set in, they withdraw. They immediately pull their arm away, right? So that's a natural response. You're not just going to leave it there, but it causes immediate action. So keep that in mind. Very important to remember that. Now, the second emotion that we experience that we also have a reaction to is pleasure. When something or someone makes you feel good, do you want it to stop? Ask yourself that question. Most people do not. We look at the picture of the woman getting massaged here. I mean, you pretty much, if you ever went to get a massage, you hate it when the time goes off and you're like, hey, it's all done. You're like, oh man, I could use like another 15 minutes, right? So we don't want that to stop. We want it to go on forever. So basically, when it comes to pain, we have an immediate reaction to make it stop. Pleasure makes us lackadaisical. We don't want anything to stop. We don't want to take any action. We just want to keep things exactly how they are. So as humans, our responses to pain and pleasure are completely natural. Think about it this way. No one ever needed to teach you how to respond to pain or uncomfortable sensation. Same thing with pleasure. No one needed to teach you that that feels good and you wanted to keep going. You learned that all on your own. These same responses are directly responsible for all of our losses in trading, and I'm going to explain exactly why that is. When it comes to trading, losses equal pain for the trader. When you see you're losing money, you have the same natural reaction to end the pain and close the trade. That's because pain demands immediate action, and action is what locks in your results. At the end of the day, when we push the button to get out of that trade, it seals in the results of that trade. So what state of mind are you in when you push the button? Most of the time, for most traders, it's pain. Now, if we go to the other side, gains equal pleasure. Who wants the money making to stop? Okay, when you're in profit, you have the same pleasure reaction to not do anything and keep it going. Who wants to end that, right? Pleasure discourages action. Profits on paper are not realized gains. Think for a moment about all the crypto pumps that we've experienced in recent years. What happened in those? Everybody seemed to be making money. Everyone was getting in, watching the price go parabolic. But what happened? How many of those people took decisive action and booked significant profits? Because when the corrections came, and they came big. Think about that for a moment. Everyone seemed to be getting rich, but on paper. But when they actually got out of the market had significantly gone against them. That's what pleasure does to the trader's brain. You think that it's never going to end, and you don't want to miss out on more pleasure as the price keeps going up and as the analysts keep throwing out bigger and bigger predictions as things are going parabolic. You do not want to fall into that trap. You need to take decisive action when you feel pleasure. That's when you need to ask yourself, what is it I should be doing to book these profits, sealing in good results for myself? So again, natural reactions to pain and pleasure are what causes a trader to be a natural born loser without any knowledge or study. It could be your first day as a trader. And if you have a normal reaction to the feeling of pain and a normal reaction to the feeling of pleasure, that will cause you to be a net losing trader because your pain response causes you to take a natural action to make the pain stop. The problem is that that action is at the very worst time when you are in a drawdown or losing money. Your pleasure response causes you to be completely lackadaisical when you're seeing a profit and never actually take it off the table. So let's take a look at a quick example that illustrates what I'm talking about further. Remember that markets range pretty much 90% of the time. They're just going up and down. So what happens when you combine a ranging market with a trader that has natural responses to pain and pleasure and is trying to make money? So let's dive into our example. We see that the market has gone down right here. There's three different components I want you to look at. We have the S that's in the red circle, we have the P that's in the purple circle, and we have the red dotted line. So what do these mean? The S is where the typical retail trader may have sold the market. They see that it's starting to break out short, they jump in. The P represents their max pleasure. They're feeling like they made a really good decision, right? The red line is what we call their pain threshold. This is the moment that that original position, that original short order goes out of the money, causing pain, the all-important emotion that causes action in the market. So again, what do we know about financial markets? They range 90+% of the time. So what does that mean for this short seller who's feeling really good about their trade? It means this. It means the market is highly likely to whip right back up to their break-even price, putting them at break-even or out of the money and causing them pain. And what do traders do when they're in pain? They take action. Booked loss. Let's keep going. Now we have a trader that has decided to buy the market, probably the exact same trader that just experienced a loss on their sell. You know what I'm talking about. They have now reversed, jumped in, and they're feeling good again. They caught this pretty nice move. They're feeling max pleasure at the top there, causing them to be completely lackadaisical. I wonder how far it's going to keep going, not taking action. But what hasn't changed? Markets haven't changed. They range 90% of the time. So what happens? Market dives right back to their break-even price. They're not feeling so good about it anymore. That pain causes them to likely take action, book the loss. Guess what? More bad results sealed in. Totally natural response is causing them to lose. Let's keep going. Now it's bouncing again. They buy again. This is it. Feeling max pleasure. Seeing a great gain on that trade. What happens? Again, lackadaisical, not taking the profits off the table. Here it comes back right below their break even, putting them into a nice loss. Doesn't feel good. They book the loss again, sealing in their results, negative results. We'll keep going. Now they sell. This one's on a pullback. Feeling a little bit better at this one. Got my stop a little bit higher. Now I'm feeling pretty good. The market's moving down, but what happens? Nothing's changed. Range is back up. Hits their stop loss, another booked loss, and so on. You can see where we're going with this. Another sell, feeling really good about this. This one has to be the big breakout. Finally, I'm finally going to get my big payday, but guess what? That pleasure is causing you to not be decisive. It comes back, stops you out again. All throughout this chart, you saw money, you saw good profits, but your pleasure response made you not take decisive action. Your pain response is what caused you to seal in negative results. So what does all this teach us? Well, if you start looking at the market from the perspective of are traders feeling pain or are they feeling pleasure, you can see where I'm coming from here, that this leads to a pretty profound understanding of how markets work. In fact, if you have a methodology that steps back from the market and looks at where are sellers in pain, where are buyers in pain, and you look for those levels become pretty amazing to create a strategy around. That's what ATS and the methodology is all about. That's where we take this understanding of what causes true action in the market, no matter what. All humans, everyone is susceptible to their pain response. If we use that as a form of analysis and work around that, understanding our own pain response, but mostly understanding other people's pain responses, what kind of strategy can you craft using that information to your advantage? That's where we're going in this training, and that's why this lesson is so important. So what about pain intensity? That's a big factor here to understand. Your pain threshold is directly related to the amount of risk that you're taking. How much money can you lose, or how much money can you handle seeing being negative? More importantly, the more risk, the closer your pain threshold. So if you're someone that likes using a real tight stop loss and a real big position size, you're going to get death by 1,000 cuts. You're going to continually get stopped out on a lot of those trades. So what's the cure? Well, here's some suggestions. Use wider stop losses, placed well outside localized master pattern framework and cycles. Remember that all high and low points within a defined expansion range can and usually will be used by the banks for accumulation of supply. Don't be their supply. Trade with multiple smaller positions instead of going all in at once. The banks accumulate over a range of prices. You should too. A lot of people will tell you that you need to completely eliminate your emotions as a trader. This is absolutely stupid. No one can ever fully eliminate their responses to pain and pleasure, and you wouldn't want to. You want to know when something's on fire or you're getting hurt so that you could do something about it, and we want to experience pleasure. That's what being alive is all about. What you need to do as a trader is be aware of your responses to these emotions. You need to step back and have awareness to when you're feeling pleasure and you're seeing a profit. Ask yourself the question, train yourself to ask the question, what should I be doing now? Because I know this pleasure is likely going to turn into pain soon. Have that self-awareness. And when it comes to your pain threshold, you want to make sure that you understand that and that you give yourself room to work around that. And the next level to understanding pain and pleasure is looking at it from the view of what are other traders experiencing, because if you understand when they're in pain and when they're in pleasure, that provides you with a great strategy to start your own trading from. So what's the takeaway from this lesson? Pleasure creates complacency and non-action. Pain creates swift action and seals in your results. Markets range 90% of the time. This means that every buy or sell position you take at almost any price has a 90% chance of being out of the money in the near future. This means that there's a high likelihood you will experience pain on almost every trade. This could be at the beginning of the trade when you're waiting to get in the money, or after you've seen a big profit. Most of that can be wiped away rather quickly. Be aware of that. The intensity of your pain is directly correlated to your trade size and the risk you're taking. Use small positions and wide stops outside the localized master pattern framework to not fall victim to liquidity harvesting by the banks, because at the end of the day, it's the banks who push the price around and they are hungry for liquidity. They know exactly where the stops are, and those stops are associated with pain, and pain is associated with action. It becomes very predictable for the banks to harvest that liquidity. Don't be their liquidity.